Okay, let's have a look at some pairs to prepare for next week. Lately, I haven't been making videos as I've reduced the number of charts I look at to just just one, really. Actually, I've reduced it to a monomaniacal focus on US dollar yen. I'm not going to analyze a dozen charts like before. I find that it was actually causing too much of a distraction and disruption, and I couldn't focus on anything as I was just skirting from one to another. This is not what I can handle, so I've reduced my analysis to just one and a few more that I feel will be offering a bigger advantage. So let's go through just those ones. US dollar yen has been the one I've mainly been focusing on. And I will look at the dollar charts, and I think oil, and I'll just update the gold and silver talk that I made before as well. The smaller, more exotic pairs I'm not going to look at all. And Bitcoin, some of these pairs I deal with on Twitter. I put on Twitter charts for Apple and Tesla, both of which look good. I think Amazon looks quite good too. But I haven't gone over that. The Apple and Tesla charts are interesting, and Tesla in particular has been working perfectly. So that's one that went well. US dollar yen, back in March or April, I made a long-term video about the expected price movement of this pair. Now, in terms of small details, it's almost impossible to plan too much as the small details are changing all the time. But in a larger sense, I feel that's the easier thing to grasp, as it tends to work out more in a way, or maybe the disruptions come along more slowly. Something like that, it takes more time to recognize them. But with more minor moves, there are so many changes that planning them too much won't work out. You just have to adjust as it goes along. So the reason why I'm saying that is because of this current wedge in US dollar yen. Now, the big picture on US dollar yen is that I am bullish. I mean, clearly, long term, US dollar yen has been in a brutal downward swing since the gold window was closed. And this has been brutal. I just feel that based on this impulse here, which is this 5-wave swing, we are in a bullish advance. Now, technically, the idea on this would bring this up to above the high, so really into the above 128.7. That's a massive move, obviously, from 112. But I don't want to focus on that. That's just one thought about a bigger picture. I just want to emphasize that at this stage, on a monthly basis, the upward bias is quite strong. And so I've been working this idea, and let's have a look at it on a lower time frame. Now, it's been correcting the 2016 advance all year long, and we have now put in a sufficient correction here. A minimum 3 waves has been made here. The question is if we will see one more swing so that the third part of this would turn into a bigger 3-wave correction before moving up. It's possible, but I have a 5-wave advance on the upward leg from the Friday before last, so I am focusing on that for a corrective buy. So, as I mentioned before about the details, whether this is done or we see one more leg down, the gist of it is that it is corrective. You can see a very clear bull flag. It's actually clearer on one of the bar charts here. This is inverted, but you get the gist of it here. With the very bearish looking flag, that is essentially a textbook flag, and if we see the break there to the downside, there will be an excellent trade to at least this low, I would suspect. 1 second, I'll go back and mention which low I mean. To at least a break of this high. Because, I mean, I don't want to over-speculate on this because there's no telling what's going to happen. It could morph into something like this for a bigger 3 waves and then come down one more time and then go up. And that would be a really long-winded process. But my computer's lagging. In any case, the bias is to the upside on this, and I feel there's a very good situation. I'll go over it in just a second. On the monthly chart, the stochastics are hovering in a sideways move above the 50 level. It's the same thing that we saw on US dollar, Canadian dollar in all of 2016 and half of 2017 into May before it collapsed and worked out very well to the downside. The same thing is happening here, sideways stochastics, a turn here, and I'm looking for that upward move to at least above 1 to 119, above this high. But I suspect really it'll end up moving above 126 to 127, and from there you have the bigger idea actually above, oh sorry, never mind, that is actually a bigger idea into the 130s. But some people have said that a weak US dollar is not going to help this, but you have to keep in mind this is in 2 parts, and the yen may, if we see a lot of weakness in the yen, as we've seen for a long time already in euro yen, and I think in Aussie yen, I haven't really looked at it. The yen itself, a weak yen will be enough to see this rise. Now, on the low here, we made the low here Friday before last, and from this move here, I'm looking at it as a 5-wave advance. Very simply, 1, 2, 3, 4, 5, and I'm looking for a 3-wave correction to here or so, anywhere. Who knows how deep it'll go. But as long as this low holds, there is a bullish setup here for another advance above 112.70. Now on the 1-hour time frame, I put this on Twitter. I actually put a proper count in by my standards, and I have a 5-wave advance into Thursday. Now there's a 3-wave correction here, and I'm looking for this to continue on down. Let's see how it goes, but when we come, if it does make a new low into the 111s, lower 111s, I'll be looking for this to turn back up and move higher. So I'm looking at this as a buying opportunity on the next descent, but there is a short trade here to the downside on Monday. So as long as we can get a correction somewhere in here, in whatever manner, as long as it's 3 waves, I'm looking for this for a move up and out of the trending corrective channel. And I will consider only a new low if this is broken to the downside, because right now I can count it as a valid impulsive wave and I'm looking to buy into it. So in my opinion, this is the next big trade to the upside. We had Euro New Zealand in February, which was outstanding, US Canadian to the downside in May, and now US dollar yen to the upside in the second half of this year. So by Christmas time, I would expect to see this up above 118. That's all. Who knows how else it'll develop. So the big picture is up. The details of the move will fluctuate, and I'll have to adjust to those as they're presented. So that's my main focus. Now let me move on to a few other things. Let me look at the US dollar pairs. I really like this statement. It's served well for quite a while now. Okay, first of all, there's probably enough of a count here. This wedge idea doesn't really work, but there's probably enough of a count here to suggest the 5 waves are in. You could probably force some kind of really horrible triangle out of this. I'm not sure, but the points are, there's divergence, first of all. There is a sufficient gyration number and count to put 5 waves into here. The commitment of traders report has us just below the zero level. I think we are at minus 6,000 in the last report. Yeah, it's under 6,000, but that is basically zero level. And historically, the dollar index gets bounces, at least since 2011 or so. Upon reaching the zero bound here, you get the oversold, pardon me, oversold level, or the kind of reset zero position. You can see price tends to bounce or at least stabilize on each zero level there. So we are there on US dollar on the DX, and it's been like that for a while, frankly, without much change. So if this can get a bit of traction into next week, we do have the possibility here for a bullish advance. Okay, contrarian sentiment figures of small traders. There's not much of an extreme here. This has been under 20 for many months. It was all the way down into the single digits for a while. There's really nothing here that is extreme on either side except for oil. I would go over that at the end. So, tradable options. Pound is another one that is looking decent to the downside. Now, I had to adjust this idea on Twitter. As I talked about this, there were bullish setups in here that I was working from the last video. I think I covered this in the last video. A lot of little flags here off of impulses that were tradable, and it got a bit vicious here. But looking at the bigger picture, the whole decline from 2014 sees us effectively at resistance here. There is still some bearish divergence on the weekly. There is a kind of topping formation up here on the daily. And if you look at the commitment chart, there's been a big change in the commitment all the way back to the zero level effectively, which is again a stabilize or reversal spot. Maybe it's easier to see on this chart. So if traders come back in and take on short positions again, who knows? But it is at that zero bound level where there's usually a change in trend for whatever time, and we'll have to see from there. So I am expecting a reversal up here of some sort. Now, obviously this for or leading one idea is done. I do like the idea that we had the truncated 5 into here. You can make a case that this is wave 4 up here without any violation or breakage of rules. Though we'll have to see on a correction, because if it's a small correction in a flag type manner where the downward move is corrective, we'll have to see if we have a setup to the upside. I would say locally, right now, it is set up for a move down. The UK was downgraded by Moody's on Saturday, if that makes any difference. It did sell off on Friday. On Friday night, it did sell off at the end there on the downgrade. But if there's a break and a flag here, there will be a setup to sell. Now, the $1 pair that does look pretty good to the downside is Aussie US dollar. There's the link here with iron ore, with copper, and there is a very extreme COT commit position here on the Australian dollar. It is at historic extremes, at least recent historic extremes. It's exceeded that, and last week on Tuesday the commitment was at a new extreme level. So that is the type of indicator which will work well. Now remember when we had this on New Zealand US dollar about a few weeks ago? This has changed drastically in the past couple months. We had this extreme in the commitment of traders to the long side in the New Zealand dollar in July, and this turned around pretty spectacularly on the July high with that. So there is a good history there of it working out, and if we can see that also turn in the Australian dollar to the downside, we have a setup there that can work very well with the metals weighing in as well with this currency. So extreme position. There are enough gyrations here to justify a downward move and a completion of a three-wave correction now. So effectively, you can count this a number of ways. Effectively 3 waves. So I will be looking for this to turn over on Monday and looking for bearish setups on the small time frame. You take this as a bearish impulse. This can be 5 waves down. Small correction and look to sell into this so long as this high holds. To justify the downward move, this could be something like an ugly expanding diagonal. But in any case, the downside move here with a break of trend is what I expect in the coming days. So I will look for setups on this as well. New Zealand US dollar, I don't have an opinion of at this stage. The commitment on New Zealand US dollar is completely reset. Now, Euro US dollar does have enough here to justify a peak. You can count this a number of ways, as always. You can force a triangle here, I think, for A, B, C, D, and E, and a spike to the new high. So if we work the assumption that the high is in here, as you see, the ADMA is just holding it well. I think that the bearish odds in these US dollar pairs, in terms of what looks best to the downside for a trade, would probably be Aussie US dollar at this stage. Maybe pound second or alongside it, but Aussie US dollar looks very good. And the COT position works out on pound too. The COT position in the euro is not in an extreme, it's reset. There's nothing wrong with that. There's no extreme in small trader commitment either, or sentiment rather. And we are still above trend here. Also keep in mind there's the Merkel election. That doesn't sound great. You know, it sounds like she's won. She probably will take it pretty easily. So there probably won't be any type of relief rally like with Macron in, what was that, in February? Sorry, in March or April or May. So this does not offer an immediate good position here for a sell, and definitely not one in my opinion for a buy. Not at this stage. So this is one just to sit and see how it develops. You can also make a case for a triangle here. That would have to alter my count, but there is also a case here for a triangle. So if we get an upward thrust on Sunday night, Monday morning, and we see a reversal, we can then count this as 4, and I will have to adjust the other count. But for now, I would look for this to break trend, create a small bear flag, and then look to sell into that. So pound US dollar and Aussie US dollar are the ones that are looking good to the downside in the dollar pairs, and US dollar yen looking very good to the upside. So those are the three main ones I'm looking at next week. Okay, what I mentioned about oil with its extreme sentiment, this is a good indicator. This often finds highs and lows, and 87 is quite high. Anything above 85 or so is getting extreme, and that fits here. Now the idea on oil was that this low here was going to see us ascend. Now the ascension, if you can call it that without being sacrilegious, was corrective, in my opinion. Small correction, and now we are looking at a pretty straightforward three-wave move. So if it can top out here and turn over, there is a bearish case to be made here in the coming weeks. And that would just suggest that we are moving down for a deeper correction to beneath, I would suspect, beneath $42, down into 40 or so, which is a grand move. So if we can see something like this, and then a flagging type of sideways move and another sell-off, that would look good. So far, I don't have much to work with here. There's a small type of hanging man here. But I will keep this in mind. If a flag situation appears, like in Bitcoin, there were some great flags on Bitcoin, not this week, but last, like this. Perfect little three-wave move with a hanging man at the end there. Those are pretty much ideal dream situations for corrections. There's a good three-wave move here with, again, a little kind of hanging shooting star off the end. These three-wave corrections, either to the upside or downside, with then weak or strong candles suggesting movement against the correction, are great setups. You see them in both directions. This is similar. This is one to the upside here. That was a simple three-wave move. I talked about this on Twitter. Buy at 35.30. There was a little 1 hour hammer here. You cannot get an easier trade correction than this. 3 waves, 1 hour hammer at the end, and then off it goes. So if we can see something like on oil, on crude oil, if we can see something like a downward move and then a 3-wave correction on a smaller time frame, like a 4 hour, that's a great setup in either direction. So I'm looking for the same thing on US dollar yen. Basically, it is essentially the most basic and primal type of technical analysis. Forward movement, or sorry, rather vertical movement, and then some type of sideways move sloping against the main direction. You cannot get any simpler. And then 3 waves as an Elliott Wave mannerism, basically. 3 waves against trends. So Bitcoin, well, my projection to 4,800 when we were back down here at what, 2,500, was pretty much spot on. It only came a couple dollars. It went about $200 above 4,800. So at this stage, this down move is corrective. So I see a lot of counts which are putting wave 4, like really all-time larger wave 4, here. It is possible. It is possible, despite all the shit coming out of China and, you know, public official sentiment, I don't know how to phrase it, impromptu like this, but sentiment going against Bitcoin. It's still possible at this stage, I would suggest, from the chart pattern to see another high above 5,000, which would top it out. My opinion, what I'm working at the time, is that this is the high. Now, just because it started correctively does not mean we are going to go up and make a new high. It can start corrective and then continue correctively. And I emphasize that like a real pedant because we had that. I was visiting Japan in 2013. And then when I came back, there was, I came back in December, right there, 8 December, and the price was falling off a cliff at this time. And I was into it then, not owning, invested into it, but interested in it, into it. And the down move was pretty much corrective. And I was looking at this and thinking, okay, that looks like a corrective move. And I actually bought into this corrective move. I don't remember where. It was in the 700s. It was actually on Christmas night. That's trader commitment right there. among many other descriptive terms for buying Bitcoin on Christmas Day. But I bought it on 25 on the evening of Christmas, on Christmas night, if that's the right term for it, 25 December 2013. And I can't remember how much, I didn't hold it for very long. Maybe $100 something. I made about $1,000 on it, and I closed out. And then it came down and it corrected further. So the reason I'm telling this is not to talk about Japan, which is amazing, or Bitcoin or my investment in Bitcoin, or trade rather. It's just to say that something that starts correctively is not going to, you cannot take it to immediately imply, or to mean rather, because it implies it, but you cannot take it to mean that it is going to make a new high. Because obviously here we just saw a corrective move up and then another corrective leg down, and that carried on all the way down to 200. So it's possible that this has started correctively, we see a corrective move, and then we get this kind of like, whatever, as I showed there. So lower time frames for that. This is only 3 up on the 4 hour. So are we looking at a bigger correction here for a 3-wave move overall and then a sell-off? Possibly. I'm not interested in following this. I don't even know why I started to talk about it, just because of the oil connection. The time to buy Bitcoin at this stage is kind of long past. Hold on, I'll mention something in a second. I recommended buying Bitcoin at 930. And then I think I talked about it again at about 2,500 when I made the 4,800 projection. So those are saved in videos, and those were good buy opportunities. Now, there is one bullish case here, and that it's made a decent weekly candle. That's a decent inverted hammer. It's a weird position for it with the big spike here. But the stochastics is still just holding above 80, actually they might open just a touch below, but there is the possibility, if the traders can work this, to get a new high above 5,000. It's possible. I don't have anything else to say about this, frankly. There are too many possibilities. We can look at a 3-wave correction and another corrective move down. We can treat this, maybe there's a morph into something else. I do not think the risk reward here is good, because keep in mind, there's all this shit coming out of China, or rather, well, there's the whole mining issue with the Chinese miners, and they make up such a huge percentage of Bitcoin mining. And there's a whole demand on all the accounts to close and to liquidate everything. So I'm not interested in being bullish here. I can only point out that the start of the down move is corrective, and then you can take it from there to see what kind of move develops to the upside now. Okay, one moment. Aussie, New Zealand, I have no idea what the hell's going on there. I'm not looking at the other ones at all. There is one actually I like. All right, let's deal with a kind of exotic. Euro pound, which screwed me over analytically in this region. However, now we have a pretty decent case. I would say better than decent. I would say that we have a completed 5-wave move here. You can alter this count in many different ways. It can also be 1, 2, 1, 2, 3, 4, 5, I think. 4, 5. But in any case, 5 are done into here. So what we're looking at now, we as in me, is that there are 5 waves into here. So the upward move from July 2015 is finished. That's over. And now Euro pound is going to correct to the downside for the next, I would suspect, couple of years. At least year, I would suspect. So I would think at this stage that if we see a decent bearish flag forming, the usual thing there will be a great move to the downside. We've had a good impulsive move to the downside now. I can look at this as a corrective move. It seems to be already forming one for probably wave 4 of this leg down. And then look to see how it develops from there. But there's probably a trade to the downside here, and I would treat every correction as a chance to sell, because I think we have finished a 5-wave count and that euro's strength against the pound is finished for now. So correction just sells in this. So I would actually add this to the other chart. So US dollar yen is the main one. Aussie US dollar and cable look good to the downside, at least in a short sense, short-term sense, near-term sense. And euro pound to the downside as well. US Canadian, I will skip. Let me mention the metals, the precious metals for right now, because I followed this up. I made a big deal about this, and it did work out to an extent. But again, things changed. So I talked about buying silver at 1680. That was the close of the July candle. There's a decent correction down to 1620, decent buy signal, another decent buy area here. Made it up to 1820 or so, and since then we basically returned to the close of the July candle price level. So no real movement since July. And I talked about moving from 1680 to above 21, and I was very confident about it. It hasn't worked out. That's how it goes. The issue is, of course, one main issue on this, major issue on this, is that this one, and specifically gold, so basically both of these, they run counter. They have that inverse correlation to the US dollar yen. So if we're bullish on US dollar yen, as I am, then gold and silver will probably tank. I don't have an option in gold anyway to the long side. And I would give up on silver, frankly. I think if you trailed your protective stops up with the move, at least I would say above 1720, you would have been stopped out for a small profit. And that's the way it goes. I don't see a buy opportunity in gold. I think gold is in trouble here. I think the gold bulls are in trouble here if US dollar yen is bullish. There's a very long-standing, I don't remember how long, maybe decade long, maybe longer, correlation, inverse correlation between US dollar yen and gold. And so we're looking at gold to fall with a strong US dollar yen movement. Yeah, that's it. I have nothing else to say about this. I did mention that I'm much more confident in US dollar yen than gold. I think I mentioned that in the last video or the one before. That hasn't changed. US dollar yen at this stage, a bullish US dollar yen is the highest confidence trade possibility and option and analysis I have at this stage. I would say it's basically on a level with my confidence in US dollar, Canadian dollar, and Euro New Zealand earlier this year. It's the part of the trilogy of big moves this year in these pairs. I probably have more confidence in US dollar Canadian than US dollar yen right now, but it's quite close. Okay, I'll mention briefly the two charts I started with. Tesla. I've been working this count since I think the beginning of May, maybe the second week of May, I can't remember. The idea is for the bullish count, we were at stage 4, ending wave 3 of 3 and starting wave 4 of 4 when I put this account on, and I've been tracking it since. And we got the triangle for wave 4 of wave 3, and we got the new high to complete wave 3. Okay, so the idea now is that the triangle thrust made the new high above June, and it's reversed sharply from there. Now I'm looking at a wave 4 high. Now the violation point is obviously the wave 1 high. I'm looking for this to correct down into the low 300s or so, above, one second, above 291. That's the violation point on this count. So a correction for wave 4 above 291 and then a new high. But I would say that in the near term, the downside is going to hold in Tesla. So if you're looking to sell this, or rather if you're long, well, the trigger point was the new high, which I talked about on Twitter. But I would say over the coming months, the sells will have it in Tesla. And the same, I have the same count in Apple. I worked this count on Friday. It seems pretty clear to me, which who the hell knows how that'll turn out. 1, 2, 1, 2, 1, 2, 3, 4, 5 for 3, wave 4, wave 3, wave 5, completing wave 3. Now I'm looking for wave 4, and I'm looking toward 120. I'm looking for this gap fill. So the idea is that we're going to see a corrective move in Apple towards 120, 130, 110. It almost doesn't matter because, I mean, there's not going to be an overlapping. And then a new high. I think the downside is going to work out in this pair now. So same as Tesla. I would suspect that the bears will be in control of this now. I have a completed count, 5 waves into 165, and the bigger count from the origin looks good for a downward move. So let's see how this develops. I do not think this is the ultimate peak, but that's the thing, you know, whether it's the ultimate peak or whether it's just the penultimate peak, as I think, with 3 before 4 before 5. If you work the downside, and it does come out to the downside according to this count, you will win either way, whether it's just a corrective downside for 4 or it's the total peak for wave 5 and then we have a major correction underneath that. So the downside should be worked here and favored, in my opinion. So matching counts there between Tesla and Apple, and let's see if we can get those. I don't trade these, I'm talking bullshit. Let's see if that works out. Okay, that's it. Good luck, and I will update online, even if not in a video. Bye-bye.